Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, October the 29th, 2010, and like we do every night, it's time to look at the markets. Check it out. Okay, we're going to start off today looking at gold. We told you 6 days ago that this particular index here, when she's pulled back and she gives you that hammer formation, that might be your bottom, and you want to consider doing the buying right there once you had the next opportunity. We have on our website at PerfectStockAlert.com right there, we have 2 free videos in our, what's it called, video chart school, where they show you how to trade the hammer formation. And if you followed that pattern, you know that there was a stop loss limit right below here, right, 1 cent below the previous low. Your entry point was the close of this day or anywhere lower, as long as it didn't break below this low point here. So on this day you could have bought, on this day you could have bought, and on this day you could have bought. In any event, you are now making money, okay? Advance the stop loss limit. Always do that. Just lock in a minimum gain. That way, if she turns around on you, you don't have to worry about it. You're going to have a gain no matter what, okay? That's just smart trading. Some other items about smart trading. Back here, we saw the move to the upside. We told you about this bullish divergence here versus here. You had a move to the upside, and the slow stodge had moved to the downside price. You got this big move to the upside here, but once she had gotten away from us, we don't buy. No matter what. You follow the chart. You never, ever, ever chase a chart. I don't care how promising you think it may be, you always wait. You trust your chart. This went on for a long time. We told you wait, 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 wait. Got the bearish divergence formation here, here. She pulls back down, then you get your entry signal, then you take your opportunity. You do not ever, ever, ever chase a chart higher, okay? I don't care what it looks like it's doing. If you're going to protect yourself, you're going to have to stick to a couple of basic ground rules, and that is, number one, wait for a pullback for your entry opportunity. Otherwise, you're chasing. So in this case, if you didn't use the opportunity we told you about last Friday in last Friday's video, you don't want any part of this now. You've missed it. Okay. The trade is taken off, and now if you bought in here, your stop's down here, you're increasing your risk every time that you chase. All right. If you're this far advanced into it and you say, oh, I'm going to buy here, I could make some more money as it keeps going higher, the only logical stop would be the previous low point. That's a lot of risk on the table, so you wouldn't do that. You would wait for a pullback to give you a quality entry opportunity. That's how you trade smart. In conclusion, congratulations to everybody who made money on that trade. It was a totally free service, totally free advice. Couldn't have possibly lost a dime on that one, and it was absolutely beautiful. All right, pretty cool, pretty simple. This can keep moving higher, especially if the Fed comes out and announces more QE2 than expected by the market. This could actually keep moving to the upside. That's why I wouldn't just jump off of the trade. I would advance my stop though, just to lock in a minimum gain. Okay, here we are looking at the Dow Jones Industrial Average. You'll see this is a very similar looking chart to the gold. You've got this nice run up here, all the way up here. And what are you waiting for? You're going to buy it, right? No, you're not going to buy it. Even if you were a bull, you'd wait for a pullback before you would consider an entry opportunity. And this little sideways activity here is not considered a pullback, all right? You can note your pullback when you pull back down here, all right? Like that, pulling back below this 20 line on the slow stodge back here, back here. If you're going to be a buyer, you'd be a buyer there. You'd look for hammer signals like that, like that, like that, any kind of reversal signal. But in any event, you always do it with the right strategy. Otherwise, you're chasing, you're being pulled around by the nose, and you don't want to ever do that. Now, again, I'm not a bull in this market any way, shape, or form. You can't see it on this chart so much, but we have all kinds of fundamental problems out there that I do not believe the Fed's manipulation of price activity changes, nor do I believe $4 trillion by the Fed would actually change the global economic crisis either. I think it's just a game we're playing here, and it doesn't actually change me from being a bear. I still see the fundamentals as being much worse than any activity that we're doing right now. And again, we talked about Greece earlier this week, and we had news right after that video that I put out. The very next day, Greece came out and basically had worse data than was expected. So whenever this continues to grow and these problems continue to spread, we know that eventually you're going to have to pay the piper. There's no reason to believe that the problem is actually resolved. Okay, so from a bear standpoint, I can look at this and say, from a fundamental perspective, this is not right, and from a technical perspective, it's already made this big move. You don't buy. All right, you should be looking at having a very tight stop on it if you were a buyer down here, or you should be already be out waiting for a pullback or some kind of absolute signal that told you you had limited risk and quality entry opportunity, so forth and so on. Otherwise, you're just kind of foolish. Okay, here you are looking at the Nasdaq. You'll notice we've been rallying here just like we were in the Dow Jones, the S&P, so forth and so on. Everybody's been rallying since September for about 2 months now, straight up. Okay, there's no pullback until you get a pullback. Even if you were a bull, you would not be a bull until you got that. You're just overextended from support. This is the extension right here, and it's well over here. All right. If you bought here, the only logical stop is down here. That's just dumb. So you would wait for a pullback if you were a bull. And from a technical standpoint, like I said before, you can't be a bull here. 1, 2, 3, you got 9, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and one back here makes 11 gaps up below you, nothing above you. It's absolutely way too risky. No reason to be a buyer there. Again, the RSI, which only signals on occasion, but it tells you when the market is extremely overbought. It's at 71.72. Anything above 70 is known as extremely overbought. So yeah, I would not be a buyer of this in any way, shape, or form. And in fact, if you wanted to be a bull and you had an argument for a bullish reason, you'd still have to, look at it from a technical standpoint and say, wait a minute, I need a pullback before I can consider entry, just like you did on gold. All right, that's just common sense. You definitely want to stick to the rules because they protect you from the losses. Okay, pretty cool, pretty simple. From a bearish standpoint, you guys know I'm a bear here. I do not believe in this rally. You're going to be looking at next week, whatever news comes out. One or two things are going to happen. Either the Fed's not going to be as encouraging as the market had hoped for, and she will just plummet lower, and that would be what makes sense to me. Or you're going to get the Fed's going to, tell you here's a little bit of what you wanted, but I'm going to talk big about what I'm going to do in the future. That would be, I would see it as another reason to sell off there, but you don't know what the market's going to do with that news until they've actually interpreted it. Another thing that could happen is they come out and say, we're going to do more than you hoped for, and boom, she'll take off to the upside, and then she's going to find resistance, and then she's going to turn around anyway, and there's not going to be any more reason to never pull back. The Fed will have already, fired the gun, and once the news is out that it gets played on, it'll get blipped to the upside. You still have to have the pullback. Never, ever, ever chase. Okay. And at the same time, understand if you're shorting here ahead of that news, you could get that move to the upside before you pull back down. All right, so that's something you have to think about. If you're short, you don't want that kind of risk, then fix that. If you set a stop in place, so forth and so on. But if you are looking at this from any way, long or short, you've got to recognize what the chart's telling you always. The news doesn't change the fact that the chart's telling you you're overextended, you don't have quality support, so forth and so on. If that stuff is not there to support your trade, you're likely hanging on a limb. All right, pretty cool, pretty simple. Okay, for those of you who would be looking for those videos on our website, we've got lots of videos on our website, free website. You can click there and it'll take you to the section of videos. If you go to the basic stock trading strategies, you can click there's two videos, one showing you how to trade on the hammer, another one showing you how to trade the shooting star formation. Very easy to scan for. You can run the scans every single night right here. All right, you got stock charts, FinViz, etc. Click here, you get stock charts. You can run scans for hammer formations or shooting stars or whatever. It's all free. And again, over here we've got an advanced section of swing trading courses. Here we got free lessons, and then here we got the actual method that I use. Whenever you check out that, we actually email you 6 videos that will rock your world. All right, show you how to find quality technicals, both long and short. All right. Last but not least, over the weekend we brought in our new traders forum. A lot of really smart guys in there, both bulls and bears, sharing insight, stock picks, so forth and so on. Love to see you there. All we ask in return, please refer a friend. Pretty simple, pretty easy. Now let's have a look at our disclaimer. The disclaimer, read it and weep. Enjoy your weekend. Be safe. God bless. Take care. I will see you all again on Monday.